Ahoy, BitcoinDorks, gather around the digital campfire because today we're diving into the murky waters of speculation and market analysis. The question on everyone's lips, Bitcoin ETFs, priced in or prepped for a price plunge. This isn't just a matter of charts and indicators, it's a tug of war between hope and skepticism, FOMO and fundamental analysis. So grab your critical thinking helmets and skepticism shields, because this journey promises to be exhilarating and maybe a little mind-bending. First, let's paint the scene. Remember those heady days in 2021 when the mere mention of a Bitcoin ETF sent the market into a frenzy? Approval seemed imminent, a gateway to institutional acceptance and mainstream adoption. Then reality splashed cold water on those dreams. Regulatory hurdles mounted, approval delays piled up, and the euphoria fizzled out, leaving a trail of what-ifs and market uncertainty. Now, whispers of renewed ETF potential are swirling in the digital wind. The Securities and Exchange Commission, SEC, seems to be warming up to the idea, and new applications are popping up like Bitcoin miners after a halving. But has the market already factored in this potential catalyst, or is there still hidden fuel for a price surge waiting to be unleashed? Let's dissect the arguments on both sides of the digital spectrum. The priced-in posse. These skeptics argue that the possibility of a Bitcoin ETF has been marinating in the market's psyche for years. Every rumor, every regulatory update has already been priced into the charts. They point to the muted response to recent ETF developments, suggesting the market has yawned its way through the whole saga. So according to them, don't hold your breath waiting for a moonshot fueled by ETF approval. The pump and dump profits. These optimists paint a much rosier picture. They argue that the market hasn't fully digested the potential impact of a Bitcoin ETF. Institutional investors, currently locked out of the crypto world by regulatory hurdles, are salivating at the prospect of easy access. Once an ETF opens the floodgates, they say, expect a wave of capital to engulf the market, pushing Bitcoin to uncharted heights. So who's right? Unfortunately, the crystal ball in the back room is still on the fritz. Both sides make valid points, and the truth, as always, is likely somewhere in between. The market might have factored in some, but not all of the potential ETF impact. Perhaps approval will trigger a short-term surge, followed by a period of adjustment as the market digests the new reality. But BitcoinDorks, here's the real takeaway. Focusing solely on whether the ETF is priced in is a fool's errand. Instead, turn your attention to the bigger picture. Is Bitcoin a sound investment based on its underlying technology, adoption rate, and future potential? Can it weather regulatory storms and adapt to an evolving financial landscape? Those are the questions that should guide your investment decisions, not fleeting ETF speculation. Remember, the crypto market is a roller coaster fueled by emotions and unpredictable forces. Don't let FOMO or fear be your co-pilots. Buckle up, do your research, and hold on to your critical thinking hats. Whether an ETF is priced in or not, the real journey lies in understanding the technology, analyzing the trends, and building a long-term investment strategy based on fundamentals, not fleeting hype. So BitcoinDorks, keep the conversation going, share your thoughts on the ETF saga, your own analysis of the market, and the questions that keep you up at night. Together, we can navigate the digital frontier with knowledge, skepticism, and a healthy dose of curiosity. Until next time, happy hodling, and may the digital winds blow ever in your favor.